Got some big news from Rivian.
Rivian one that you just mentioned there, certainly one that you seem pretty bullish on, though.
Unless something changes significantly with Rivian and Lucid, they will both go bankrupt. They're tracking to bankruptcy.
Elon Musk predicted Rivian going bankrupt? The battle for electric vehicle dominance is heating up, and it seems like everyone's vying for a piece of the pie. Rivian, a startup that has been making waves in the EV world with its sleek designs and promising technology, is no exception. But what if I told you that the fate of this rising star was predicted to fail by none other than Elon Musk himself? Let's explore. Rivian Automotive, a 12-year-old startup based in Irvine, California, has garnered recognition as one of the most outstanding electric vehicle manufacturers under the leadership of its founder and CEO, Scaringe. However, the company has recently faced challenges, and its ability to compete against industry giants and its survival remains uncertain. Rivian's primary objective is to pioneer uncharted territory by designing stylish EVs while producing them on a large scale. Boasting impressive speeds of up to 115 miles per hour, Rivian's EVs offer exceptional performance. The company is poised to deploy its vehicles worldwide at an unprecedented pace, possibly even surpassing Tesla, the leading automaker. However, Tesla's chief has expressed skepticism regarding Rivian's prospects. Unless Rivian and Lucid undergo significant changes, their fate appears to be bankruptcy, as they're currently tracking in that direction. Despite entering the market with great promise and a successful IPO that surprised everyone, Rivian and its competitor Lucid face fierce competition in the electric vehicle industry, particularly from the likes of the innovative Elon Musk. In a recent interview, Musk predicted Rivian's eventual bankruptcy, and unfortunately, his prediction has come much closer than one would imagine. To understand how Rivian, once Wall Street hotcake stock, found itself in an uncontrollable death spiral, we must first examine its meteoric rise. Rivian Motors went public on November 10, 2021, with the ticker symbol RIVN on NASDAQ. The company's initial public offering was priced at $78 per share, selling 153 million shares and raising a staggering $12 billion. This was the most significant IPO in the United States since 2014, and Rivian's valuation exceeded $100 billion. The market responded positively to Rivian's debut, with the stock closing at $100.73 per share, up 29% from its IPO price. In the days that followed, the stock continued to climb, peaking at $129.95 per share on November 15, 2021. This surge gave Rivian a market cap of over $150 billion, surpassing traditional automakers such as Ford and Volkswagen. However, this upward trajectory was not to last. Rivian's narrative has taken a turn for the worse, with a series of setbacks impacting its production and delivery targets. Compounding the issue, the company has had to grapple with supply chain challenges, resulting in a price increase that has left consumers dissatisfied and investors doubtful about its valuation and profitability. As a result, Rivian has experienced a tumultuous start to the year, with a loss of $1.593 billion in the first quarter, and a projected total loss of over 80% by year end. Despite setting ambitious targets, the company has been beset by numerous calamities, including a significant technical error that necessitated the recall of over 13,000 of the 14,000 vehicles sold. Currently, Rivian's stock is in a freefall, plummeting 90% from its all-time high of $129 per share to just $13 per share. In a bid to salvage the situation, the CEO has announced they need to raise $1.3 billion in cash through the sale of convertible notes, as dwindling funds threaten the company's survival. Rivian has announced its intention to classify its convertible notes as green bonds, a move that is likely to attract institutions interested in supporting sustainable development. Such bonds are typically associated with environmental or climate-friendly projects and offer investors the opportunity to benefit from significant tax incentives, such as complete tax exemption on capital gains or tax credits, depending on the state. Although the full extent of the benefits from Rivian's bonds will only be revealed once they are priced, raising this capital sends a message to the market that the company is changing its strategy, which may create uncertainty and unease among investors. The funds raised will be channeled towards the development of Rivian's upcoming R2 platform, which is aimed at offering an affordable electric vehicle option to customers. The R2 will be a new addition to Rivian's existing R1 platform that underpins its R1T pickup and R1S SUV models. By introducing the R2 family, Rivian hopes to expand its portfolio globally across different price points and form factors. The R2 vehicles will be manufactured at a new $5 billion factory in Georgia, US, scheduled to commence operations in 2024 and estimated to cost approximately $55,000. The recent announcement by Rivian that it plans to produce only 50,000 electric vehicles in 2023 has contributed to the company's plummeting stock price. While this figure is twice as much as last year's production, it falls short of the market's expectations. Wall Street analysts had predicted that the company would target 60,000 to 65,000 cars this year, which makes Rivian's conservative projections an indication of lower than expected demand. However, a report by Bloomberg suggests that Rivian may secretly believe it can exceed 50,000 vehicles in 2023, with executives allegedly telling employees that producing 62,000 electric vehicles this year is achievable. Rivian Automotive Incorporated has expressed losses of approximately $3.1 billion, with the Irvine-based startup bearing the brunt of the blame. Amazon, the company's largest investor, owns around 18.7% of shares in Rivian. Rivian's situation mirrors that of Tesla several years ago, when Elon Musk was ramping up production of the first-generation Roadsters, the Model S, X, and 3s. However, unlike Rivian's ambitious goals, Tesla set realistic targets and worked towards achieving them incrementally. Renowned tech entrepreneur Elon Musk's critique of Rivian has not gone unnoticed. The CEO of Tesla has raised concerns about the financial sustainability of Rivian, suggesting that without drastic measures, the company may end up in the car graveyard, like many of its predecessors. Musk has recommended cost-cutting measures to avoid this fate, a piece of advice that appears to have resonated with Rivian's leadership. In an effort to achieve profitability, Rivian has confirmed a reduction in its workforce of 6%. The CEO acknowledged the impact of this measure in an email to employees and expressed regret for the necessity of the cuts, emphasizing that the move is critical to focusing resources on achieving profitability. It is widely acknowledged that Elon Musk's criticisms of Rivian may seem biased due to the companies being direct competitors. However, this is not the case, as Tesla's primary goal is to accelerate the adoption of sustainable transportation. Elon realizes that Tesla alone cannot achieve this mission and needs other automakers to contribute, but he's also keenly aware of the challenges involved in establishing and operating a profitable car company. Tesla has struggled with bankruptcy several times, including in 2008 when the company's financing closed at the very last possible moment on Christmas Eve. Elon Musk's warnings to Rivian are a means to help them avoid making similar mistakes to Tesla's. Unlike a company focused on monopolizing the electric vehicle industry, Tesla has open-sourced all of its patents, allowing anyone to access and use their protected designs at no cost. In the current landscape, Tesla has a clear lead over its competitors, with many falling behind in terms of innovation and pricing strategies. Tesla's recent price cuts of up to 20% have triggered a price war in the car industry, marking a sincere effort by the company to enhance accessibility to electric vehicles and stimulate sales. As expected, basic economics comes into play when a dominant company lowers prices, resulting in its competitors feeling compelled to follow suit. Ford has already slashed the price of its Mustang Mach-E by up to 9%, and GM, along with every other EV maker, is feeling the pressure to do the same. However, Rivian, which is already burning through cash and losing money on every car sold, has opted out of joining the price war. In a February earnings call interview, the CEO said, quote, "We feel confident in the value proposition of what we're delivering at our pricing levels today." Rivian's fourth quarter earnings report shows that the company had a revenue of $663 million, a net loss of $1.7 billion, and cash equivalents of $11.6 billion, a decline from $13.3 billion at the end of the previous quarter. The carmaker admitted to consuming cash but expects improved vehicle gross margins over time through cost savings and higher production levels. During a 2019 interview with Recode, Elon Musk acknowledged Rivian as a potential competitor in the electric vehicle vehicle market and expressed his support for other companies making electric cars. However, Musk's stance on Rivian appeared to change in 2020 when he expressed doubts about the aerodynamics of Rivian's upcoming electric pickup truck and suggests that it may not achieve high range and efficiency. Despite this, Rivian remains optimistic and has since produced some positive developments. However, given Musk's experience with Tesla's challenges, it may be wise for Rivian to heed his warnings if they want to remain viable in the industry. Now, we would love to hear from you. Do you agree with Elon Musk's prediction about Rivian's future, or do you think Rivian has what it takes to survive and thrive in the EV market? Let us know your thoughts in the comment section below. Thank you, and we'll see you in the next video.